This Week in Economics from WBRN Radio in Boston and on the Bostonred Network. You can also find us on a Spreaker for the mobile operated, Stitcher. I should have said Stitcher for the mobile people. We're on YouTube, the RSS feed, and many other outlets, including but not limited to the YouTubes of the world, the Spreakers and iTunes. We're still around there. I believe we are, at least hadn't checked. And we're coming to Google Play very soon here. And also WBRN Radio is going 24/7 this spring. And we'll be talking about some of the lineup of there, which will no doubt include some music from roots music, we'll call it. We need to work all that out. That'll take some time. And we have, of course, our political broadcast, Bostonred, that is on many of these outlets also. And the open source report, which is a technical report, we have it every few weeks. It's been sort of bi-weekly lately. We'll get it upgraded now that we've moved past baseball season, I suppose. Nonetheless, let's get to the macro news here. DJ Trump will appoint, or has appointed, Jerome Powell, who is currently a governor on the Fed board. He will be nominated to take up a term when Dr. Janet Yellen in February. Now, evidently, according to Bloomberg, DJ Trump was thinking about reappointing Dr. Yellen, and he was convinced by his Treasury, by Muncham, I guess, to appoint Mr. Powell. The vice president, a right-winger, wanted John Taylor of Taylor's Rule fame from Stanford to be appointed. Ultimately, he was overruled, and they decided to stay with Jerome Powell to have continuality in the particular situation. There were a number of people interviewed, according to this, the Wall Street Journal. Trump said that Janet Yellen was in the running to keep her job, but he also mentioned the Gary Cohen. Cohen evidently fell out of the race because, as far as DJ Trump was concerned, the Fed chairship was not one of his priorities. And then came Charlottesville, and Cohen spoke out there and denounced DJ Trump's both sides should be criticism situations. And so thus, in an August, that was an August 25th interview with the Financial Times, he rebuffed DJ Trump. So thus, that was the end of Mr. Cohen there. Of course, Cohen is a Democrat. But Dr. Cohen said of Jay Powell, he made a great selection there. So thus, that is now solved. Of course, again, it has not been confirmed by Congress. Jerome Powell was appointed in, I believe, 2014 by Barack Obama, and that is how he made his way to the Fed. He is not an economist. He has been involved in administrations, etc., and he involved on Wall Street. So that is his credentials. One does not have to be a trained economist or academically or a business economist to be head of the Fed or on the Fed board. And Mr. Powell is by training an attorney. And so it goes. So let's go to the job numbers here. We'll get it in a minute. Here we go. This is the employment situation released by the Bureau of Labor Statistics on November the 3rd. That was Friday. And we'll get this. This is for October. The total number of non-farm, they still use this. Employment rose by 261,000 October. The unemployment rate edged down to 4.1%. That's according to the Bureau of Labor Statistics. Employment in food service and drinking places increased sharply, mostly offset a decline in September, but largely was affected by the impact of Hurricane Irma and Harry, etc. In October, job gains also occurred in professional and business services, manufacturing, and healthcare. This is a household survey. We have two. The unemployment rate edged down 0.1% to 4.1 in October, and the number of unemployed persons decreased by 281,000 to 6.5 million. Since January, the unemployment rate has declined 0.7%, and the number of unemployed persons has decreased by $1.1 million. 1 million, excuse me. Okay. Among the major worker groups, the unemployment rate for adult women was 3.6%. For Europeans, 3.5%. Declined in October. The jobless rate, here for adult men was 3.8%. For teenagers, 13.7%. For African Americans, 7.5%. For Asians, 3.1%. And for Latinos, 4.8%. Showed little change. In October, the number of long-term unemployed, those jobless more than 27 weeks or more, were little changed at 1.6 million, accounted for 24.8%, roughly about 25% of the unemployed. The labor force participation rate decreased by 0.4% to 62.7% in October, but showed a little movement on net over the past 12 months. The employment population ratio declined by 0.2 points over the month to 62.2% after increasing 0.3% in September. The employment population ratio is up 0.5% over the year. The number of persons employed part-time for economic reasons as involuntary part-time workers declined by 369,000 to 4.8 million in October. These individuals would have preferred full-time employment. Of course, it was not there. They were unable to find jobs. Over the past 12 months, the number of involuntary part-time workers has decreased by 1.1 million. In October, 1.5 million people were marginally attached to the workforce. Little change from a year earlier. So in other words, that has not changed, the marginally attached. They were not counted as unemployed because they had not searched for work. Among the marginally attached, there were 524,000 discouraged workers in October, essentially unchanged from a year earlier. The remaining 1 million persons marginally attached in the labor force in October had not searched for work. Now, here's the establishment survey. The total non-farm payroll increased 261,000 after changing little in September, plus 18,000. Employment in food, services, drinking places increased slightly over the month, mostly offsetting a decline in September. That largely reflected the impact of course, the hurricanes. Employment in food service and drinking places rose sharply in October, 89,000, following a decrease of 98,000 in September, where many workers were off payroll due to the hurricanes. Professional and business services added 50,000 jobs in October, about in line with its monthly average over the prior 12 months. Manufacturing employment rose by 24,000 in October, with job gains in computer and electronic products, 5,000 there. Chemicals, 4,000. Employment in fabricated metal continued to trend up at 4,000. Manufacturing has added 156,000 jobs since the recent employment low in November of 2016. Healthcare added 22,000 jobs in October. Employment in ambulatory healthcare services continues to trend up over the month. 16,000 there. Healthcare has added an average of 24,000 jobs per month thus far in 2017, compared with an average of 32,000 in 2016. There was more healthcare workers there. Employment in other major industries, including mining, construction, wholesale trade, retail trade, transportation, warehousing, information, financial services, and government, were little change in October. The average work week for a worker in private on private payrolls was unchanged at 24.4 hours in October. In manufacturing, the workforce week increased 0.2 hour to 41 hours. Overtime edged up 0.1 an hour to 3.5 hours. The average work week for production and non-supervisory workers on private non-farm payrolls edged up by 0.1 hour to 33.7. The average earnings for all workers was at $26.53, little changed in October. After rising 12 cents in September, over the past 12 months, the average hourly earnings has increased 63 cents, or 2.4%. In October, the average hourly earning was at $22.22, little change there. The change in total non-farm payroll employment from August was revised up to 169,000, up from, to 208,000. A lot of fluctuation always in the summer. The change for September was revised up from a negative 33,000 to 18,000. With these revisions, employment was 90,000 higher than previously reported. After revision, jobs gains had averaged 162,000 over the last 3 months, which is a respectable figure in 2017. There's still some slack out in the market, and we used to have the figure of roughly about 350,000 jobs per month. That is not here now. There was a lot of criticism in the previous administration over the roughly 60, 61, 62, 60% participation rate. Well, participation rate will actually go down in years forward because of retirements of the baby boomers. So you will have more of that, not less of that. So one of the areas that you will see very little will be done about that. That's just a demographic situation there. At, 62.7 in October, that's the labor force participation rate. We could call it 63%, but again, The employment participation ratio is at 60.2%. So depending on how you do this, it's up and down a little bit, depending on how wide open the economy actually is. Let's, while we are here, look at some impacts from the Mid-American Business Conditions Index, healthy level trade and inflation expansion. This is out of Creighton University in Omaha, Nebraska. Overall, the index moved above growth neutral in an 11-month straight, pointing to solid growth ahead for durable good manufacturing in Iowa, Minnesota, Missouri, and Oklahoma. Only in 1 in 5 supply managers indicated NAFTA was important to the companies buying and selling. Wholesale inflation gauge pointed to the September Fed hike. The out of Omaha. Let me get to the formal thing here. The Mid-American Business Conditions Index, this is from Creighton University, indicated for the 9 state regions stretching from Arkansas to North Dakota, climbed to a reading pointing to healthy economic growth ahead, according to the latest monthly results. The overall index, which ranges between 0 and 100, rose to 58.8 in its highest reading in 4 months, up from 58.2 in September. This 11th straight month. The index has remained above the growth neutral, continuing to point to positive growth for the region over the next 3 to 6 months. Both the nation and our region indicates the manufacturing sector is expanding at a very healthy pace, and that the expansion will spill over into a broader national and regional economies in the next 3 to 6 months. For the first time in years, we are not tracking consistent growth in a durable goods sector. That's from Dr. Gross. He is the director of the Creighton University Economic Forecasting Group. And Jack McAllister, chair of the Regional Economic in the College of Business. Employment. The October employment index remains above growth neutral, reading at 52.9 from September's 52. Durable and non-durable non-manufacturing sector are adding jobs at a solid pace. Energy firms and manufacturers tied to energy are expanding at a strong pace across the region. With the recent boom in employment growth, total regional employment growth year to year is now 1.3%, equal to the nation's 3 percentage gain over the same period. That's from Dr. Gross. Wholesale prices. After surging for September, the regional wholesale inflation gauge cooled still a lofty 75 from September's 6 months high of 79.6. Given the elevated inflationary readings from our survey and government surveys over the past several months, I expect the Federal Reserve to raise the short-term interest rate in December will not dampen economic activity. Confidence. Looking ahead to 6 months, economic optimism as captured by the October Confidence Index expanded to 63.8 from 63.6 in September. Healthy profit growth, lower interest rates, and an improved global business economy boosted the economic outlook among supply managers in the 9-state region. inventories. The October inventory index rate, which tracks the changes in the level of raw materials and supplies, advanced to 56.1 from 53 in the September trade. The regional new export order index was unchanged in September, solid at 54.3. The import index jumped 58.6 from 53.8 in September. Expanding regional growth spurred purchases of inputs from abroad, while growth amongst important trading partners maintained the export orders at a positive level. As stated by one supply manager, the weaker dollar is helping exports. The month's supply managers were asked about buying and selling ahead. Approximately half the respondents indicated that purchasing from abroad was important to them, was important to their firms. The current growth. Additionally, almost 1 in 5 reported that NAFTA was important for both buying inputs, and selling products. Other companies' components of the October Business Conditions Index were new orders at 61.3 from 62.5 in September. Production, our sales index, was unchanged at 67.4. Delivery speed of raw materials and supplies expanded slightly at 56.5 from 56. The Creighton Economic Forecasting Group has conducted the monthly survey of supply managers in 9 states since 1994. In those states, Arkansas, Iowa, Kansas, Minnesota, Missouri, Nebraska, North Dakota, Oklahoma, and South Dakota forecasting groups. Overall index refers to the business condition index, as we stated before, from 0 to 1. Arkansas. The October overall index for Arkansas fell to a solid 55.4 from 67.3. Components of the index for supply managers for new orders at 57.4. Production of sale at 63.4. Delivery lead time at 52.7. Inventories at 52.1. Employment at 51.1 over the past 12 months. Arkansas increased manufacturing employment by 3%, as approximately 4,700 you can get it right in a minute here. Manufacturing jobs. Slight job losses from durable goods producers were more than offset by gains in non-durable manufacturers there. Iowa, the index for Iowa shrunk still a healthy level of 55 from 60.7 in September. Survey of supply managers for new orders was at 58.4, and it was 62.3 in September. Unemployment at 47.8, inventories at 51 over the past 12 months. Iowa manufacturing increased 1.3, approximately 2,800 manufacturing jobs. Not as much there as in Arkansas. In Kansas, new orders at 68.3, sales at 73.8, lead time at 61.6, employment at 54.2, inventories at 59. Our survey for the month indicated significant improvement in a non-durable good production. Now, well, not there. Minnesota, it is still strong there at 56.3 in September from 59.4. From a monthly survey of supply managers, were new orders at 59.9, and the sales index at 64, Liberty lead time at 53.3, and inventories at 53.2. Employment at 51.7. Over the past 12 months, Minnesota's expanded both durable and non-durable manufacturing. Gains were strongest for food processing and medical equipment there. Missouri shrunk to 53.8 from 63.9. The index survey of supply managers were new orders at 56.2 and sales at 63.3, and inventories at 51.4. Employment at 47.9. Increase in manufacturing employment by 1.5%. Approximately 4,000 manufacturing jobs. Strong gains were recorded in both durable and non-durable goods. Nebraska. The index rose to 61.1 from 59.3. Monthly survey of supply managers, new orders at 61.5. Production are sales at 67.5. Lead time at 56.9. Inventories at 56. So they're in pretty good shape there. Nebraska increased manufacturing employment by 1.1%, or approximately 1,100 manufacturing jobs. Not a lot there. In North Dakota, we expect to see supply managers fell to 55.9 from 63.9 in September. Components of the overall index for new orders at 58. Production of sales at 64. After declining for much of 2016, mining and energy began to expand in the first quarter this year. Surveys over the past several months indicate the expansion continues. And so employment there is at 51.4 on that index. That's a little above a neutral for this particular index. In Oklahoma, after falling below the neutral growth rate in July, the business condition index rose to 50. Did not much there in the last 3 months overall. From a monthly survey of supply managers, climbed to a robust 63 from 62 in September. Components overall October index from a survey of supply managers in the state were new orders at 65.2 and production of sales at 70.8 and a lead time of 60.9. So they're doing much better. Expansion amongst energy firms and manufacturing companies linked to energy are driving the state's economy forward at a current brisk pace. You would expect that. And finally, South Dakota soared to 57.6 from September's week 46.6. Overall, the survey of supply managers new orders at 60.3, sales at 66.1, delivery time at 55.7, inventories at 54, employment at 51.3. While the state's manufacturing economy is expanding at a tepid pace, energy-related firms are advancing at a solid pace. Food production growth is solid there. So that is basically what we get. Survey results from November will be released on the 1st of December. That is from the Creighton University out in Omaha. So overall, these states are doing much better this year. I don't have the last year's schedule here, but from 0 to 50, if you notice, most of them were above 50 there. The energy-producing part were doing better in their indexes. We don't have the PCIs from market this time around, but we could look at some things here. Now, earthquakes dragged down third quarter profits at Berkshire Hathaway. We cover them. Bad weather hurt Berkshire Hathaway. Third quarter insurance losses tied to hurricanes contributed to a 43% drop in profit. On Friday, said it lost $3 billion before taxes are $1.95 billion after taxes, leaving its Geico and General Ray Reinsurance and Berkshire Hathaway Reinsurance units with underwriting losses for the year. Insurance typically accounts for about 1/4 of Berkshire's overall profits. Berkshire has roughly 90 businesses. From Edward Jones, said the disaster losses weighed higher than he had expected, given how pricing pressure has caused Berkshire to retrench from some business, but shareholders should remain comfortable with the overall gains there. Net income fell to $4.7 billion, or 2,473 on Class A shares, from 7.2 billion to our 4,379 per share there. I guess that's his operating profits, excluding investments, derivative gains and losses, which is said better reflect the company's performance, fell 29% to $3.44 billion, or $2,094 on Class A shares. That missed analysts' average operating profit forecast of $2,402.47. Well, we went a little off there. You could expect the losses of the book value of Class A shares, measuring assets minus liabilities, rose 2.5% in the quarter to 187,435. That's up 8% from January. Buffett is now 87, and he's ran the operation since 1965. Full underwriting loss likely. Berkshire Hathaway lost $1.44 million from insurance underwriting in the quarter, and $1.73 billion from January to September, putting it on pace for its first full year underwriting loss since 2002. Other insurers also took a bath here. Allstate, American International Group, Swiss Re, etc. Buffett's results reflect an accounting change tied to January's agreement to assume some of AIG's policy in exchange for $10.2 billion up front. So they're not hurting. Edward Jones rated a buy and encouraged that how Geico in adding markets, well, they've been running a lot of commercials, reflects a 16.5% jump in premiums and 9.9% year-over-year in policies. Some of the cash hoards will eventually be used to buy 80% of Pilot Fly, the largest U.S. truck stop operator. That's something they acquired in October. He also owns other companies, Coca-Cola, Wells Fargo, and has a 26.7% in craft operations there. On other things, Sears will close 63 more stores after the holiday season. They will get what they can get, and that will be the end of that right there. Following news last month that Whirlpool Corporation would stop supplying some big-name appliances to Sears. They're going out. Those closures will include 44 Kmart stores, 18 Sears stores, following 330 closures in 2017. They're just a shell of themselves. The move will reduce the number of locations operated by Sears, once the largest U.S. department store, to around 1,000 from 2019 stores in 2012. Liquidation sales at closing stores will begin on November the 9th. So I guess for the consumer out there, keeping the eye on the prize, watch out for the Sears stores and see where they are. Shares in Sears lost 54% over the past year. They're down to $5.17, something very few people could picture themselves at being at. Let us go back to the BBC here. And wait a minute here. The big headline here is U.S. job growth in October fell short of forecast, no doubt about that. Now, we gave you the numbers, but the analysts had expected a sharp increase in hiring after the hurricanes there. Wage growth was also slower than expected, no doubt about that. Jobs in September were revised up. We already covered that. We won't go back there. But from TD Trades, its chief market strategist said there was a lot to like in the report, pointing to an increase in job in industries such as manufacturing, professional, and business services. But economists were cautious, saying that it's hard to tease out the effects of the hurricane-related activity. The economy had expanded steadily in recent months, with GDP growth at around 3%. At the same time, job growth has slowly decelerated, with the hurricane effect there. Economists say that earlier pace of hiring would be hard to sustain as the supply of people looking for jobs shrink. No doubt about that. But they have been puzzled that wage growth is not stronger as employers pay more to recruit staff. Again, it is a cause of strong job growth, but where's the wage growth? That is from ETX's Neil Wilson. The Labor Department, we gave that up. The average hourly is $26.53. That's up 2.4%. And from an economist at Bernstein that worked on Joe Biden said the figures are a sign there is a room for unemployment to fall further. There's no doubt about that. Others say the large hurricane-related swing in food and hospital jobs, typically lower-paid field, might be affecting the numbers. No doubt about that. Effectively, what's happening out here, our suspicion is there are a lot of low-paying jobs that are coming in here, but at the same time, the higher-paying jobs are not exactly coming in. So that is one there. Let's see. What else have we got going here? This is the BBC. We don't see anything here that is, as they say, fantastic from the BBC, so we'll go ahead and do the numbers here from the markets. These are on Friday, unless otherwise indicated. Positive unless indicated by negative. The BBC Global 30 at 51.34. That was on Friday. And let's see, the FTSE All Share at 5.25. In Amsterdam they were at 1.32 on Friday. In Frankfurt, the DAC was at 37.93. In Paris, 7.47. In Brussels, 10.29. In Madrid, they were in the negative there at negative 100. In Zurich, 42.40. And in Moscow, 8.11. In Johannesburg on Friday, they were down 294.82 in the negative there. In Bombay on Friday, 112.34. In Karachi, 45.23. In Lahore, negative 45.11. In Colombo on Thursday, negative 2.73. And in Tehran on Wednesday, 195. Oops. I'll get it right in a minute here. Passing some people. In Sydney, 28.10. The Nikkei on Thursday was at 119.004. The Hang Seng in Hong Kong at 84.97 on Friday. And in Shanghai on Friday, they were in the negative 11.57. In New York, the Dow Jones at 22.93. The NASDAQ at 49.49. And the Merc, that is the commodities market out in the Midwest city of Chicago, at 7.99. And on Monday in San Pablo, 1,046.17 in the negative. And in Mexico on Friday, negative 48.41. And on we go to commodities. Brent crude, oil futures were up $1.45 at $62.07. That's driving some of that growth in North and South Dakota. We were talking about the index there. On Wednesday, Brent crude on the spot was down 45 cents at $58.59. West Texas Intermediate oil futures there were up $1.12 at $55.66. T-Boone picking is jumping for joy there, even with $15 barrel oil, which is slightly above that now. Gold on the Forex was down $1.10 at $1,276.30. Dubai Gold futures down $6.30 at $1,270.60. Silver was up a penny at $17.08. Euronext Life futures, cocoa was up $2. Robusta coffee was down $16. We're hoping. White sugar futures was up $10. The Bloomberg Commodity Index came out on Wednesday at 85.59. And that is the numbers. And this will do it for this week in economics on the 5th of November. The consumer on the prize, well, the Sears stores are liquidating their inventories, the ones that are closing. So there will be bargains out there. It'll be interesting to start looking in the next 3 weeks, I guess. I believe Thanksgiving is on the 20th, so roughly 15 days away. 2 weeks, a little over 2 weeks, we'll start these so-called holiday sales. We'll see where the consumers are here. Anecdotal evidence out there, the consumers are overextended. Many have already done their holiday purchases. We'll see how that all goes. This is Q4. It's a very important quarter for retail people, those that are left standing. And there's a lot of consolidation out there. And incidentally, the merger between T-Mobile and Sprint. Sprint is SoftBank. T-Mobile is Deutsche Telekom. Fell apart. So the evidence is it's better for consumers. The wars are on. Voice or mobile service is now purely a commodity. There are all sorts of schemes going. The 2-year contract has fell into the trash can of history, at least temporarily. And other kinds of machinations are going on there. The iPhones and some of those, Best Buy was selling their version for more than Apple. They had to discontinue it. I would imagine what happened there was that literally people were resisting over $1,000 for a phone. Well, I think at Apple you'd get it for around $1,000. They were a few $100s and change more than that. So there's some perils in this market. It's not as what you think it is out there. And when you see in many areas, not in all, a supply of jobs and And part of the problem is I was talking a few months ago to a fellow that was homeless, and he said, well, yeah, the jobs all over. He had traveled to various states, but he was having a problem finding affordable housing. You're working at the rate of, we'll say, $9, $10, $11 an hour. So that is a big problem. Incidentally, on our Bostonred Network here, for the Bostonred political program, we're covering the upcoming election out in Seattle, Washington. Ballots are mailed out, etc. We're looking at that between Jeannie Durkin and Carrie Moon. We're carrying a debate live there from the People's Party Forum. Their party, they ran actually in the primary. Candidate there, Nikita Oliver, ran, and I believe she came in third. Moon actually out. So in other words, they have a primary. So those are some of the things we are looking at around here. And we'll talk to you next week, if not before. Incidentally, on BR on the World, we'll be covering President Trump's visit to China and also his visit to Vietnam. And we'll be looking at there. Have a good weekend, everyone. We'll talk to you next week. Good day.